Good afternoon, everyone. This is Mike Heburn, the Chief Operating Officer with Level Financial Advisors. And today I'm joined by my colleague, Paul Coleman, CFP. And we're going to talk a little bit about Gamestop because, as we know, Gamestop is everywhere in the news, Paul. Gamestop is on your Facebook feed. It's on, I had someone tell me today, I think my daughter told me it's on TikTok. Gamestop is everywhere. So let's talk a little bit about that. What is going on with GameStop?
Can't stop, won't stop. GameStop, I think, is my new favorite hashtag. It's a great question. I find it entertaining, and I say that because Level Financial Advisors is not shorting stocks. We're not buying GameStop or individual stocks, so I don't have to worry about it or how it affects my clients. I get to sit back and just learn as a finance nerd. So what's going on here? It's a really interesting case. And a lot of people are talking about larger repercussions, although I don't believe most of that will come to pass. Essentially, you have a David versus Goliath situation here. Goliath being various hedge funds. And those hedge funds have made a bet that the stock GameStop will fail. And they made very, very large bets. And some smart people on Reddit recognized that they may have overbet their hand, the hedge funds. And they organized a response to this from retail, so average Joe investors like you and I, and some of our friends and family, potentially. And they made a push to buy the stock. And that weighs against the bet that the stock would fail. And it can, in what's called a short squeeze, cost the people that bet it would fail. It can cost them money and potentially really hurt their position. And that's what's been done through significant coordination of retail investors to buy this stock.
Yeah, it's interesting too because what you hear about it, especially when it comes to the halting of retail trading sites like Robinhood and TD America, it's interesting because now it's affecting retail investors as well. I mean, I think that's part of the big news story here.
Yeah, I've spent quite a bit of time reading Reddit commentary and threads and just following along, again, as entertainment for a finance nerd like myself. There is some commentary out there that the temporary limiting of being able to buy GameStop at the app Robinhood was unfair. I don't really want to comment on that. As far as concerns about long-term effects on trading, I don't have any concerns. I've seen people talk about how this could break the market. I just don't think that's the case. A market is a man-made construct, and it's imperfect, although it does work very well. And from time to time, it needs to be tweaked, as cracks show. And in this one example of one stock, there's some signs of some cracks, and regulators are already taking steps to address that. Larger implications for their other stocks in the world, very minor. They're not currently seeing this kind of action, although the same Reddit thread has drawn attention to a couple others. Mm-hmm. But in general, the over 7,000 publicly traded stocks in the world are not having problems and are not faced with this short squeeze scenario.
So, okay, so as we are recording this right now, the market's just closed, and I'm looking at my phone here, and it says that the Dow dropped more than 600 points on Friday. So the average investor might look at that and say, all right, Paul, tell me how this isn't really affecting me. Is this GameStop madness really causing the market to impact the average investor? What would you say to that?
I would say that there is the small potential for a minimum ripple effect from what's going on with GameStop to potentially affect client portfolios. Small, short-term, relatively minuscule. As far as the market going down today, I'm sure that's based on a couple million different factors. And the one that's in the news is rarely the one that's really affecting the market.
Sure, that makes sense. So, put on your prognosticator hat for a second, and I know, nobody knows what's going to happen in the future, but if you were, as a financial professional, where do you think this ends up? What do you think happens? Obviously, everything will eventually tamp down, but what do you think? Where does this end?
Great question. The answer of where it ends for the people that are currently trying to buy GameStop or are currently stuck in a short squeeze, which is where a lot of hedge funds are, that one's a little tough to know, because this is, I don't want to say it's uncharted waters. Things like this have happened in the last 100 years, really. And every time the markets, the people that monitor them, tweak the rules to make them work a little more efficiently the next time, so this doesn't happen. A lot of people are probably going to end up losing money that are playing in this GameStop trading sandbox. And I think it's important to show the difference between day trading and investing for the long term. So Level invest for the long term. We buy stocks in anticipation of them going up over the long term. Day trading is a different world. And every day, hedge funds and also retail investors, through various mechanisms, make bets daily. And whenever you're making a bet, whenever you go to a casino, you are right sometimes and you are wrong sometimes. And some of these hedge funds and some of these retail investors are going to find out that they're very wrong. It's going to cost them some money. And to me, that's the sign of a healthy market. Where it ends up for the rest of us, no change. Maybe a minuscule effect on portfolios today or next week. We're still going to buy stocks and hold them for the long run in anticipation of them creating wealth and the world growing and helping all of us meet our goals.
Right. So obviously I have to ask, of course, because we're going to get asked by our clients, what should our clients be doing or thinking of with our portfolios when it comes to this type of activity? And I would guess too that this is not the last time we're going to see something like this, because now it's a thing. So we may see it again in the future. What type of advice would you give to our investors that invest in our Level portfolios?
In the moment, it may feel scary or exciting, depending what side of the table you're on. But this kind of market activity, these high standard deviation events that rarely occur, rare doesn't mean never. They do still occur from time to time. And we've seen many over the last 100 years of the stock market. And our portfolios are designed to handle everything that has happened in the past and everything that is likely to happen in the future. That doesn't mean that they don't go down in value from time to time, but each portfolio is built specifically for each client's goals. And this is just another example of something crazy that came out of left field and could affect the market a little bit. But long term, it's not going to affect those portfolios.
Okay. All right. Well, good. Well, I guess what I'll do then is we'll just wrap up this quick video session. We wanted to get this out there as quickly as we could for our clients and the folks that visit our website. Of course, if you have questions, we absolutely recommend that you call us at 716-634-6113 at our office. You can also email us at invest@levelfa.com. And until next time, this is Mike Heburn and Paul Coleman with Level Financial Advisors.